Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sea of red on the crypto bubbles and the pullback on Bitcoin on the macro scale as well as on the shorter time frames. Guys, let's just jump straight to it. If we just go to the Bitcoin chart, we're here on the 4 hour. We can see that we pretty much maxed out somewhere around 31,000. And if we just scroll backwards, we can see where this line connects to. And we can see it is this toppy area where in the last episode I was suggesting that we often could get pushed up and pushed down, just kind of chop around, and that you really shouldn't be surprised if we see something like this happen. Look at these incredibly long candles, right? And where do they drop down to? Somewhere around 29 to 80. We see some dropping around to 28.7. We even see some wicks down here to 27.9, and in this case over here, all the way down to 25,300. That's an interesting number. A lot of people talking about 25,300. So let's go ahead and just look a little bit further back to see if there's anything else that this stuff is connected to. And you can see that overhead in the bear market, of course, we didn't really tag that line, but in summer 2021, we did have a deviation under it, and then flipping on top of that was the initiation of the next bull run, basically, that we had, right? And so that was a little bit of a foreshadowing that if we aren't able to flip 31,000, then that could be more of a depressed market. You do see how price action sat there for the good part of basically half a year, just kind of chopping around on top of this $31,000 level. And then even way back here in January 2021, you do see that that was used as support to launch the bull market, right? And so, guys, this is a really critical level. And we also see this wick down here at 27.7, which may be some type of foreshadowing as to where we could potentially drop on this one. So 2027 is also an interesting thing that we have this wick down here. So I have marked that out with a gray line. If we just go forward, because we want to see where we are in the context of all of this, then you can see that basically we've chopped under there. We had the bear market. We're pulling back up. We're trying to break out and make a new bull market, but we just haven't been able to do so. And a lot of people have this or that number in their minds. For me, 31,000 is very important. I do have this gray box right here because we do have wicks up to there. And so pushing up to 32,000 would not have been unexpected. If we do zoom in a little bit on this area, you can see how we did have a lot of chop up there at 32,000, a lot of chop up here at 32,000, a lot of chop up here at 32,000. So I still think that if we do get some type of a mean reversion, that it is possible that we chop up in that area. But at the current posture of the market, of course, it seems less likely, and that we might be looking at the bottom of this little range here again, like a 28.8, 28,000, and then 27.7 and 25.3. So that's more realistic as we are pushing down. And what you can see is that we're already hitting that 28.8, 28,000, right? And then we have this level down here, which could, potentially be support from over here, somewhere around 26. Let's just say 26.6, 26.5. And then, of course, we have that wick at 25,300, which a lot of people would like because they really want some good entries, assuming that we get down that low. I'm not 100% convinced that we are going to drop that low, but hey, we do have this range, and if you see, that this entire range has basically been up and down in the past, then it's very easy for us to go up and down there again. Personally, I'm favoring 27 to perhaps, this just the current area that we're in, just because we did get a lot of chop in there and we really haven't explored it in the same way. I do think that this is a little bit of an extreme push down, but if we go to the CME chart, one of the things that I was showing you on the previous episodes was that we had this CME gap over here, and I was suggesting that there was the potential, and I really fleshed this out in the Discord. The link is in the description of the video below. But I was really suggesting 10 days ago that we could push up, deviate, and then come back down and fill that gap, and that this could be a potential place that we find support on the professional charts. Now, losing that, of course, could get quite scary. And you do see that we have another gap down here around 21,000. So we don't really want to lose this area. Of course, we have the same type of supports that we have on the 24/7 exchanges, somewhere around 25,000-ish. But just in terms of CME gaps, we have one over our head at 35,000, one under us at 21,000, and then we just filled this one right here. So, it's an open question whether or not the professional traders, right, they want to push us back up or whether they want to push us back down. But we do have this liquidity within range here if they just want to grab that really quick. And so one more pump up, really shouldn't be unexpected. And if we take a look back at the 24/7 exchanges, there really is a lot of structure in here that could be holding us up. So, you know, is this a level that I think that we're just going to like smash down through? I'm not sure because we do have a lot of structure here. We have this wick, we have this wick, we have this wick, and then we have all this chop. And so I think we're going to slow our momentum in this area, even if we do have another push down. And then I would be looking at 27,000 maybe, right? Somewhere in that neighborhood, 26.5 to 27,000. And potentially we could have a mean reversion that could push all the way back up to 31, maybe even take out that 32 and then push up to 35. Now, again, that's not the play right now. We have to see how this momentum shifts over here, but there is the possibility of that here. Now, time is going to be of the essence for this. We do have to turn this around very quickly. We can't just keep just falling in a straight line like this. Otherwise, momentum is just going to break through these levels like a hot knife through butter. Guys, let's take a look at the levels that I gave you in the past episodes to see if these helped you or not. Of course, I am going to make updates for it, but I just want to do a little bit of review because I think some of you are still confused on how to use these levels. And I just want to show you using past levels that I've given in previous episodes, how helpful it could be. So here we see this daily chart that, we're on the 4-hour chart, but this is the daily levels. I gave you the daily levels and we would have been somewhere under here. Okay, and we were looking like we were going to break into this gray zone and then we could potentially lose it, just like we did over here. I was seeing a lot of indications that maybe this move was going to happen. And so over here, I was warning you of a potential bear trend that could form. And of course, we had a mean reversion before we had that bear trend. And so I was speaking a little bit early. But of course, what I was seeing was actually dead accurate. And what we did is, look at this. Look how perfectly we bounced off this support here on this support level. We came up here. We tagged my momentum and general continuation levels. We failed to get above the volatility pivot, which suggested that we weren't going to pump. Okay, like if you can't break through this level, if you can't sit on top of that volatility pivot, you're not going to go flying to the upside, guys. And so when we bumped our head on that, this would have been, this is like $1 million piece of information for you guys to have. Okay, so all you needed to do was put this level on your chart, and you could have seen, did price action get on top of that? Or did it get rejected underneath it? If it got rejected underneath it, well, you might want to just reconsider your positions. And as long as we're in this alpha momentum pool, you could say, okay, well, it's kind of a gray area. We don't really know what's going on. But then I had this a critical hold momentum level, right? And if we broke that level down, right? That's what we had to recapture over here. We did, and we pumped. But if we broke down under it, what does that suggest? Well, that we were going to lose our momentum, right? And then we came right down, and look at this blue candle right here. We bounced straight off of my neutral point of control. Now, some people may be saying, there's no support in that area. Why would we bounce? That was the neutral point of control that I designated for you. We had a little bit of a bounce there. We came back, basically retested this zone, and then we broke back down. Now we're at this gray support level over here, okay? And so that's the story of Bitcoin basically on the daily chart. And again, this is the past levels. I will update you on them. But look how helpful these levels were to you, and they were dead accurate. Dead accurate here, dead accurate here. Losing the bullish control zone, that was dead accurate in terms of us potentially finding our way to the neutral point of control. Losing that hold momentum was a really big cue that you should consider that we might continue pushing down to this neutral point of control. And look what's happening right now, guys. Okay, we broke down under the neutral point of control and we're back testing it bearishly. So either we need to reacquire that point, or it would just suggest that we could push all the way down to this bearish control zone again at that $26,500 level. And so I've given you the map. Okay, I've given you the map in advance. Some people make fun of this style of charting because it's something that nobody else does. There's nobody else in the crypto universe that charts like this. And guys, you can just see time and time again that my levels get hit. Now let's take a look at a different chart. Okay, let's take a look at the 3-day, which I gave you back here. Okay, we weren't even dipping down yet, and I gave you these 3-day levels when we were up here. We were at $30,000, and everyone was like, "We're going to the moon. We're going to 100K. We're going to $1 million Bitcoin." And I gave you these 3-day levels, and what did it suggest? Well, it suggested as long as we held this volatility pivot on the 3-day, that we could have that kind of bullish mood. So no problem, right? Well, problem, we ended up retesting it. You see this perfect test here, right? And what happened is we actually just got caught in it. We didn't hold it. Okay, and so when we broke down, what happened? We came right down here to my general continuation line. Look how that wick taps that general continuation line almost perfectly, right? So you can see that little blue wick right there, right? And it taps this level perfectly. And so wouldn't it have been nice to have that level on your chart so that you would know that if we broke down from here, where we might tap? Yes, you could say, we had support and resistance in there, this gray line, right? But this wick actually came deadly accurate, almost to the dollar precision, right, to this general continuation line. And so if we got a little bit of a bounce off of that, what would it suggest? That we could potentially push back up into this area. We did, we got reaccepted, we tested it, but then we made a little bit of a double top. We broke down because double tops are bearish. You see this top right here, this top right here, we broke down, couldn't hold it, just like we couldn't hold it over here. And so even after all these multiple tests, what did we do? We put in a lower high, and then that suggested what? Straight back down to this level, this lose momentum level, broke under there, bearishly back tested it, and what did we do next? Look how perfectly we came down to my bullish control zone, right? And now we're threatening to lose that bullish control zone on the 3-day. Again, guys, this is an older chart. I'll give you a new one because we are now down at a lower level. I'll give you a new roadmap to look at, okay? And I just want to show you one more because we also have the 5-day. And you can see that the higher the time frame that we go to, the bigger the map, okay? And so look at this. The 5-day is saying that we still have support in this area, right? And that basically we've just tapped the general continuation. Now, we have a little bit more time before the 5-day is going to close. So I'll be updating that one later. I'll give you the daily and the 3-day today. But look at what happened, right? Look at this price level was holding this 5-day volatility pivot. It tried it twice, it lost it twice, and in the second time they said, nope, sorry, we lost it twice, game over, right? And so it came back into the alpha momentum pool, and then what did it do? It just swam all the way down to the bottom. Wouldn't it have been nice to have these levels on your chart so that you could kind of think about how that price action might move over 5 days, right? How that price action might move from one side to the other. And again, guys, like you could say, yeah, we have this support and resistance in the background. We could just take a look at that, but here it is. I gave this one to you on the 15th or maybe the 14th, and so we had it basically, almost a week in advance. Okay, that we could see this potential move and where the price might sink to should we lose these levels up here. And that's just an incredibly powerful tool, guys. So I just wanted to share that with you, this kind of insight, because if you follow this channel, sometimes you might get confused about these levels, but at the same time, having these levels, you're just going to see time and time again how they're respected. And again, you could say, there's no real support up here. Well, guess what? I was showing you where the volatility pivot is, and again, like we were just failing to get any type of movement on top of this level. It showed weakness at the 5-day volatility pivot. We lost it once, we lost it twice, and losing a key level twice is usually a pretty big deal, okay? And so we ended up drifting down there. Now, guys, let's go ahead and update some of these for you. I'm going to go and give you new daily levels. And so let's just jump over to the daily just to see what the daily candles look like. Whew, that is just a very engulfing and just a very scary drop there. And so you can see that currently we are underneath the hold momentum level. We do have to capture 28,250 in order to have a chance to swim back up here. And in particular, we have to get above my neutral point of control, which is at 28,600. So if we're able to get above 28,600, guess what? We might be going for a swim to the upside, okay? And then we're gonna potentially have the chance, assuming that we don't get blocked by this gray bar here, that just a regular support and resistance, but we're gonna have the chance to reach for 30,000 and then potentially grab the volatility pivot at 30,440. And that could initiate some type of reversal on this chart that could then push us up to 32, maybe even higher. Right now, we're very far away from that. This chart is very spread out. But as you can see, it is possible should we have some type of reversion. And if you look back in the history of all these charts, you can see these wild swings happen all the time, right? Like all the way down, all the way up, right? All the way down, all the way up. Okay, so like people were freaking out. Like we pumped all the way up to 26.6 and then we dropped all the way down to 24, right? And people were freaking out, but then suddenly we just popped up even higher. Okay, so this stuff can happen. And so it's important not to be a perma bear. Don't be a perma bull, but just be a clever little alpha monkey, and make sure that you're not just bag holding. If you do see these key levels being broken to the downside, then sell your bags. Take some profit, put food on your table. You don't have to be loyal to these coins. These coins won't necessarily be loyal to you, and we could easily break down to the bearish control zone in that 26.5 area where the new chart is currently locating the bearish control zone. Again, guys, the bulls don't get in control until we're above basically 31,000. So that 31,000 level here is very critical. You do see how the bull market, which I showed you, is on top of it. And so we do need to capture that top area if we want to just push higher. And it also makes sense why we would get rejected there. I hope all of this is making sense to you. Let's go ahead and take a look at the new 3-day chart. And it's interesting here that the 3-day momentum pool is smaller than the daily momentum pool. That's not usually the case, but in this case it is. And so if we do take a look at what's going on here, you can see that bulls have just lost control on the 3-day chart. Now, this one is going to be closing in 21 hours. So basically tomorrow it'll be closing. And we really need to get above 28,700, either on this bounce before tomorrow or in the next 3-day period in order to push this thing around. Otherwise, we're probably going to just go sideways for a pretty long time, maybe several weeks. But we are getting a little bit of a bounce at this horizontal support here. And potentially that could bring us back up to the top of this channel. You can see the gray area up here, which is a little bit higher than the bullish control zone. So the 3-day bulls do have a chance to reacquire the bullish control zone. And hey, like if you reacquire the bullish control zone, most likely you're going to be bullish. Okay, and so then we're going to add momentum around 29.6, and we're going to capture that volatility pivot again around 30,000. So that is a very important area. And if we want to keep pushing higher, of course, you can see the top of the candles, right? We don't have to go by the wick here. You can go by the top of the candles on the 3-day for a 30,400 is the key level there. Just making a 3-day candle that's higher than that one in the next period or in the next couple periods would show that we're probably going to continue to push, even though we have this wick over here. Guys, I think that's going to do it. Perhaps you just want to see where the neutral point is. The neutral point is all the way down at 25,700, and bears don't take control of the 3-day chart until 21,000. So again, there's a lot of distance here. Now, the problem is as long as we're underneath this bullish control zone, we could just meander and drift to this neutral point of control down here around 26. So we're going to have to see if over the next few days, if this doesn't rise and perhaps give us a little bit more support, or if we're just going to drift all the way down here and break a little bit of structure. I think one thing that we should do is probably take a look at our EMAs, and you can see that on the 3-day, we do have something going for us, which is that we have the 200 and the 300 right here at 27,400, where we should get a nice bounce off of that, I believe, should we continue to drop maybe a wick down to 26, again, like 26,500-ish, but then potentially closing the candle above this one, whether it's this candle or the next candle, and then that could potentially set us up for a bounce or some type of a short squeeze to the top side, not really pleasing anybody. This really wouldn't have done anything more than retest the 20 EMA and potentially retested the 200 essentially here. It wouldn't have captured any liquidity or anything. So from a 3-day perspective, I'm not really sure if this is anything but just a little bit of a healthy move, to be honest, that the 3-day chart hasn't really gotten in a while. You can see the last time that the 3-day tested the 20 EMA was back here in early March, and now we're just looking to do essentially a similar move now that it's April, almost May. If we look at the 2-day, you can see that the 2-day is doing the same thing and still has the potential for that mean reversion to the upside. And it does have that 200 EMA support here at the neutral point of control. You can also see that the 300 is right below us, just giving us a little bit extra lift. And you do see all of these candles being supported by the 300 on the 2-day. And so, even if we do push down, maybe 27,000. 500 could be a low for us, just assuming that we get the same type of a bounce we got with all this chop over here on the 300, and that would be nice for just a little push up perhaps. And on the daily, you can see that we don't really have too much clean support on the daily, but when you take into context the 2-day and the 3-day, then obviously we do have a structure below us. Just for the daily, you can see, of course, that we have the support somewhere around the 50 and between the 50 and the 89. Of course, the 89 is usually a good check back point. So if we do come down all the way to 25,500, that's perfectly normal. That's not something that I would consider too bearish. A lot of people are really highly worried about this, but I just can't be that worried yet, guys. Let's go ahead and see if we can see anything on our volatility. And we can see that the push up is over. This push down has basically been initiated. It has not completed yet. And so, yeah, guys, it just suggested that there's most likely going to be more of a push to the downside as this thing, just continues to contract, okay? And then perhaps the expansion could be back to the upside. Now, one thing that could happen is that we could get a situation where essentially this thing like reflips over and we get one more push to the upside like this, and then the market kills over, okay? And this would be that push to 32, perhaps even 35K. So that's what I'm seeing on volatility. Now, of course, the thing that we have to worry about is that, what if this thing just goes like this and just ends up dying and resetting? That's your bearish scenario. But in my estimation, that's a little bit less likely at this point, although we can't really be biased to the upside or to the downside in our current position, just based upon the look of this volatility. I just can't be biased in that way. It's just not normally how the chart works. Let's go ahead and take a look at the 3-day, which will be closing tomorrow, just to see if there's anything more interesting here. And this is kind of interesting because the 3-day has heavily pushed to the downside already, and you can see that it's almost bottomed out. So it does suggest that the 3-day might want one more push to the downside and then closing out. So that would suggest somewhere in the neighborhood of that 27,000 is kind of a bottom. And so I will be watching the 3-day here because, again, we had a nice expansion to the upside when this contraction finished last time. And so if this bar can touch, somewhere in this area and start rounding, you see the way it rounded right here, then I would think that this move is probably going to be done. So thank you, 3-day. That was very insightful. Let's see. I think that pretty much covers it for volatility. Is there anything else that I can put out here? Yeah, I mean, we can just be fairly certain that our stoke is pointed to the downside right now. This is very toppy, and so again, it just suggests that more of a push to the downside. If we look at the daily, obviously this one's going to be turning down. Are we reset yet? No, this thing doesn't look reset, right? This is reset down here, and so the daily does suggest more push down also just to get reset, and then that could potentially give us that fuel to push back up. Okay, we're just not there yet. Let's just go to the weekly just to see how we're doing on the weekly. And on the weekly, yeah, we are curling down here, so that's probably going to get dragged down even further by these other indicators. So we are going to have to watch out for that long term when the weekly chart comes into discussion, maybe this weekend, guys. Okay, I'm going to wrap it up there. Hope you enjoyed this episode. I hope you found that helpful. Of course, we were talking about the potential for a pullback for several episodes. I do hope that you felt prepared. Of course, you can always join us in the Discord. Again, the link is in the description of this video if you have any questions or if you need any insights or advice. Of course, we can't give financial advice, but we can at least share our experiences and opinions. Guys, that was your alpha for the day. Stay safe and happy trading.